All right, good afternoon, everybody. Before I get too far here, let's just do a quick audio, video, visual check. Make sure you see the slide that I've got here and you can hear my voice. And if so, just type a Y there in the question box through GoTo and just let me know that that is all working before we go too far. All right, perfect. All right, great. So welcome to today's special event hosted by FFR Trading. We're excited to have you with us for what's going to be an exciting and eye-opening presentation, I think, featuring one of the most consistent and innovative traders in the business, Ian Cooper. Before we get started, I just want to thank every one of you for taking the time to join us here. Whether you're new to Ian's work or a longtime follower, you're in for a real treat today. Let's just talk about what we're going to get into today. Obviously, we'll cover the risk disclosure, give you a little idea of who we are here at FFR Trading and what our role is here. I'll introduce you to Ian. We'll get into Ian's strategy. Ian has a portfolio of strategies that we'll get into that will help you diversify your portfolio. And we'll get into a little market discussion. Ian will do his presentation, talk about the current markets and give you some information about his programs. And then we'll talk about a summary of all the course details and the offer that we have for you today. Again, the risk disclosure, important note here, trading involves risk if you didn't know. It's not suitable for everybody. Past performance is not necessarily indicative of future results. And the information provided in this webinar is for educational purposes only. Please consult with your own financial advisor before making any trading decisions. All right, so let's talk about who we are here at FFR Trading if you don't know. Since 2006, FFR has worked hand in hand with professional traders to bring proven, time-tested strategies directly to individual traders. Our role is simple here. We vet and verify the performance of every strategy that we offer, and we match traders like yourself with the right systems, the right programs that fit your goals and your risk tolerance. We provide ongoing support, education, updates. All the traders update their subscribers, so you're never left guessing. We don't manage money here. We empower traders with access to some of the brightest minds in the markets, and that includes today's guest, Ian Cooper. Here's some of the team, so if you do give us a call from at some point in time here, some of the extended team, you might talk to one of the portfolio strategists, right, that will help you build a well-diversified portfolio of strategies here. So, all right, let's go ahead and get to the main event here. Ian Cooper. All right, Ian Cooper's been a force in the trading world for over 2 decades now. He's written for Forbes, Investor Place, dozens of other financial publications, but more importantly, he spent his career developing real-world trading systems that focus on clarity, consistency, and results. What sets Ian apart isn't just his insight, it's the way his strategies work together, and we'll talk about that today, to help smooth out market volatility and generate steady returns across a variety of market conditions. So, Ian, welcome.
Hey, thanks for having me.
And where are you joining us from today, Ian?
I'm in Baltimore at the moment.
All right, and I'm down here in Orlando, Florida. So if anybody wants to visit Disney World, just give me a ring and I'll put you up for a few days. Ian, let's talk about, really want to focus on, even though we're going to focus primarily on the Algo AI, which is one of your newest programs, we want to make sure people know that you have basically a portfolio of strategies, and they all kind of work synergistically to help smooth out returns over time. So let's talk about some of the key points to these strategies. The first up we'll get into is Netta, and that's your news event trader. Well, talk a little bit about news event trader and how that strategy works.
Well, we're simply trading news events, and we're also trading severely oversold and overbought conditions based on news events as well. So when news comes out, well, I should start out by saying that we trade anticipation, dissemination, and then the death of news. When news comes out, it has that initial impact. It'll drive a stock significantly higher or significantly lower, depending on the strength of the news. Once that news begins to fade, that's where the opportunity comes in. So if a particular news event creates an overbought or oversold situation, we can buy calls or puts on that extreme move. And that usually plays out, pretty nicely. We trade the death of news more than we do the dissemination or anticipation, but those also play a factor.
So you're seeing a lot of the well, the recent market events is probably a good example of that too, right? When you talk about the death of news, when a move has just kind of gone and got overextended, I guess, in one direction or the other is kind of what you're talking about. All right, let's talk about trigger point. Trigger point, you're pinpointing pivots using, there's 5 key indicators. I think you're using about an 85% accuracy. Talk a little bit about trigger point and how that kind of differs from Netta.
Trigger point, we kind of trade, again, excessively oversold, overbought conditions. But we're also using, with this one, we're focusing on things like RSI, Williams percentage range, the Bollinger Band set at 2 standard deviations above and below the 20-day moving average, MACD, stochastics, everything plays a role. And once all of those indicators align, say in overbought or oversold territory, that's your trigger point to buy in and hopefully make some good money on the move.
Now, with both Netta and trigger point, what universe of stocks are you looking at? Is it a specific sector, or is it just basically anything that's liquid that you will trade?
Really anything that's liquid. We kind of like to go after, with trigger point, we kind of like to go after the stocks like those in the magnificent 7. That way they're liquid, they're trusted names, they're likely to bounce back or pivot from overbought or oversold conditions quicker than, let's say, a small cap stock.
Right. Now, tech stocks, the third program that you have here, that one is focused, obviously, kind of self-explanatory, but more on AI, semiconductors, kind of the whole innovation boom.
Anything that's related to technology. Recently we've been trading a lot of AI stocks, semiconductors, things like that. There's some big stories in there. We can take a look at stocks like Palantir, for example, which has been bouncing around. It's trying to break higher today. In fact, we put out a trade on Palantir earlier today. We still like it. We'd like to see it, break significantly higher. It's still a bit undervalued where it is right now.
And then the quick moves, obviously, that one focuses on fast moving trades based on some short-term technical breakouts that you're looking at. Is that correct?
Yes. And we're trading every sector there. We're using, the volume spikes and momentum and breakouts, and we'll throw some technical pivot points in there as well. We're actually working on new pivot points this week to introduce that as well to make the system even stronger.
All right, fantastic. And then the latest and greatest now is the Algo AI, and that I know you focus on the dark pools. Talk about that and how that is a huge advantage as a trader.
Well, the dark pools is the lead indicator for Algo AI. We're simply looking at what institutions are buying as far as calls and puts. And every day we get a very long list of sometimes 200, 300 different transactions. And we're looking at those that are above $500,000 in trading value because it shows that they're serious about the opportunity and aren't just, throwing just 10 grand at a particular trade. Now the dark pools are they're kind of hidden from retail investors, and the reason that they do that is because they don't want to unfairly drive a stock higher based on information that a major firm is buying. So if Goldman Sachs, for example, announced that it just bought, you know, $10 million worth of, let's say, Apple, that could unfairly drive Apple significantly higher. So we use that data, which we pay for, to make trading decisions. So once an interesting trade pops up on that institutional buying list, we can then take that and we can identify, the opportunity, and look deeper into, why is this institution spending so much money on this idea? Are there earnings coming up? Is there a momentum event coming up? How does it look technically and fundamentally? And all of those things combined can lead us to opportunity.
All right, fantastic. And let's take a look at some of the performance figures for each. Now, each of these strategies you'll see performs well on its own, but together, they offer something even more valuable, which is diversification, diversification of timing, tactics, the strategies that differ, the edge, each one has a little different edge that it's going to help reduce the drawdowns and create a kind of smoother equity curve over time. So let's kind of go through these. Netta is, that's the news event traders, averaging about 23% a month, right? It's averaging on an annual basis about 281%. You win 74% of the trades there. The average win and loss is just about the same. Anything performance-wise that you want to point out with the Netta program?
Not at the moment, but I should add that, recently, because of the excessive nonsensical volatility that's been in the market lately with the trade war and the weak dollar and everything, we have, taken some hits, but historically, markets have been resilient and have bounced back from worse. Sometimes when markets get a little crazy like they are right now, we do pull back on issuing a ton of trading opportunities, but there's always an opportunity out there. But I just want to share that, we're not gonna, there's no such thing as a perfect trading system. So because of what's been happening lately with the Dow losing 3,000, 4,000 points on, with everything going on, that, unfortunately we are going to take hits, but we do use, or we're strengthening our use of a stop loss for all trades.
And that's exactly exactly right. That the key for one of the things that we look for here at FFR when we vet traders is their risk management plan, right? Because that's obviously a huge point, which you do have in place. And sometimes, like you said, it may be just best to step aside and preserve subscribers' capital while we kind of wait for the that situation, whatever it is, in this case, probably the tariffs, just kind of settle down and before we get back in the water, so to speak. So trigger point, again, the monthly average, 26%. It's averaging annually 310% returns. It wins about 72% of the trades. Again, the average winner and average loss about the same there. Anything that stands out about trigger point that you wanted to talk about?
I actually, my list just shut down.
That's all right. We can move to tech stocks.
Yeah, for all of them.
Yeah, so tech stocks 19% average per month. I mean, guys, just think about what these kind of numbers would do, for your trading account or for your IRA or retirement accounts. Adding one or several of these strategies that work together, average annual return about 233% on tech stocks. Again, very high win rate, winning 73% of the trades. But here, look at the average winners, $919. The average loser, just $487, right? Those are incredible numbers. And then the quick moves, right? This is a shorter term strategy, averaging about 27% per month, an average annual return. Since inception, 327%. This one's hitting 77% winners. And look at the average winners over $1,000 with the average loss just $419, right? Those numbers are huge. And then finally, the Algo AI, the newest program that focuses on the dark pools, it's averaging almost 30% per month. Annual return of 300, or average annual return of 348%. That is hitting 86% winners. The average winner is $642, the average loser $590. So adding that kind of dark pool component, Ian, is that one of the things that really help boost the hit rate on that?
Yeah, it definitely can, because we have a better insider's look at what institutions are bullish or bearish on by the day. Sometimes we get 300 opportunities that just pop up on that generated list of what institutions are buying on a particular day. On Monday and Tuesday, for example, we were seeing significant institutional interest in GLD call options because gold is rallying so significantly. I mean, there's calls out there right now for gold to rally to 4,000, even 5,000 by next year from some of the major brokers.
And that's, the beauty of of your programs and why they work so well together as well is, over the past several years, you can see you've averaged, in excess of 200% annually, and that's across all these different market conditions. So you've been able to generate consistent winners while adapting to, the inflation fears, the interest rate hikes, the tech pullbacks, the political volatility, right? The tariff situation, all that stuff that's going on. That's not luck, right? It's systems, it's data, it's discipline, right? And that's what Ian can offer you in your portfolio. So today, Ian's going to walk you through, kind of how all this works, give you some actual trade examples from some of the programs here. And I'm going to get ready to hand it over to Ian. Again, he's going to take you into kind of a deeper dive into the mechanics of the programs, so show you some actual trades, explain how they all kind of fit together to help you become a more complete trader. So Ian, let me get ready to hand over to you if you're ready.
Yeah.
All right, I'm going to make you presenter. You should get a little pop-up on your end. And then you should be able to project your screen from there.
Yep.
And then when we come back, once Ian's done, we'll do a live Q&A. So get your questions ready, and you can post those when Ian's done there. We'll get to those questions. All right, Ian, I see your slides there. Looks like you are ready to go.
All right. Well, thanks for joining us today. Before we really get into Algo AI, I wanted to take a quick broad look into what's been happening in the market. I'm sure you've seen it, where some days we're swinging literally thousands of points in just a single day, based on the trade war and the potential firing of Jerome Powell, which turned out to be untrue. Okay. Unfortunately, at the moment, we do have a weak dollar and a trade war that are getting a bit out of hand with no real end in sight, despite what we've been hearing in the press. Now, part of the reason for the pullback that we saw earlier this week was the idea that President Trump could fire Fed boss Jerome Powell, which created even more uncertainty, which markets hate. It's why the Dow Jones has slipped thousands of points in just days. It's also why gold hit a record high of above 3,400. And with the trade war and a weaker dollar, gold, as I mentioned a moment ago, could rally to 4,000 and to 5,000 by the end of next year. On Monday, markets tanked, not only on trade war fears, but also on concerns that President Trump wanted to fire Jerome Powell. On Tuesday, markets came screaming back on hopes for trade war de-escalation. Then last night, it was announced that President Trump never said he wanted to fire Jerome Powell. And as noted by CNBC, Trump actually said he never had any intention of firing him. None whatsoever, never did he added. Now, we're not really sure why no one managed to say that on Monday as the markets were falling apart on that speculation. And all of that back and forth is why markets have really been, ridiculously volatile over the last few days. There's a lot of short-term noise that's out there. Longer term, we have to remember that markets are resilient. They will bounce back, and markets have really been through worse periods of time. We have to think back to 2008 when subprime sank the market significantly lower, but we eventually came back because resilient markets exist. Turning over to Algo AI, dark pools are these private exchanges where large trades are conducted away from the public eye. Again, these are hidden trades by institutional investors and significant market participants. Now, unlike your public exchanges, dark pools allow for the execution of substantial orders without immediate market impact, providing a layer of anonymity to the traders involved. So again, these dark pool trades from institutions are being hidden from the general public. And again, that's to prevent, substantial market impact. They don't want to drive a stock or a call option significantly higher based on, institutional knowledge of the dark pools. Now, when we speak about dark pools, here's what we're looking at. We have the date, the time of day, the ticker, the strike price, expiration information, and also how much an institution invested in a particular call or put. For example, halfway down, we can see that the other day an institution bought the April 25th, 2025 180 calls on Amazon, and we can see they invested just above $715,000 into that opportunity. We can also see that people are betting on Tesla upside as well, buying calls. May 2nd, 2025, 240 calls, for example, where they invested more, just under $400,000. All of that can lead us to look deeper into why they're buying. We can look at, is there an upcoming event? Is there a technical pivot point we should be paying attention to? What is the reason that they're buying a call option on a stock like Tesla, for example? And once we uncover that, then we also uncover opportunities. Now, with access to that information, we're also not focusing on every transaction that's out there. What we're going to focus on for our purposes are institutional trades valued at more than $500,000. Once we find a hot opportunity with the dark pools, again, we'll look at the underlying stock a bit closer with key technical pivot points to see if we should follow the institution into a put or a call. And some of those indicators include relative strength, or RSI, MACD, Williams percentage range, Bollinger Bands, full stochastics, etc. All of which can tell us if a stock is oversold, which would strengthen our decision to buy a call option, or severely overbought, which would strengthen our position to buy a put option. Again, it really depends on what the institutions are buying. That kind of kicks everything off for us. Here's a couple of examples. We can look at gold, for example, that I mentioned a few moments ago. Institutions were racing into GLD call options, the GLD ETF call options. Now, granted, gold and GLD are, technically overbought, as you can see here. But with the trade war still going on and a weak dollar, gold is expected again to rally to 4,000 this year and maybe 5,000 next year. So even though gold and the GLD ETF are slightly overextended, we may follow the institution in and buy a call option based on the argument for further gold upside. Here you go. This is the list of the GLD trades that I was just mentioning from institutions from, I believe this is from yesterday. You can see there's significant buying in call options and a few put options in there that we believe were hedged bets against the calls. We can also look at UNH. Now, UNH, United Health, was severely beaten up the other day on earnings and guidance, but a lot of that chaos has been priced in. You can see UNH here. UNH is now sitting at a triple bottom support around 425. We'd like to see this one bounce back. It is bouncing back very slowly today. We would like to see UNH eventually refill its bearish gap around 580. You can also see that RSI, MACD, and Williams percentage range all became severely overextended to the downside as well. There's a nice opportunity in UNH. If you want to pick up some call options on it, they are a bit expensive at the moment, given the price of the underlying stock as well. But this is a great opportunity that you may not want to overlook. Even Tesla is attracting a lot of bullish institutional trading. Now, granted, Tesla hasn't been the safest stock on the market. You can see that just by looking at the chart on the screen right now. And a lot of that is because of the protests and the chaos over his involvement with government affairs. But it's also safe to say that a good deal of negativity has been fully priced into the stock. We also just learned that the company missed earnings expectations. However, there are two key catalysts that could force Tesla higher. One, Elon Musk just said his time at Doge will drop significantly, adding that starting early next month in May, my time allocation to Doge will drop significantly. A lot of investors like that news and sent the stock up, as you can see here on the screen right now. Also, analysts at Wedbush just raised their price target on Tesla to $350 a share with an outperform rating, again citing Elon Musk's recommitment to Tesla. And there's been significant buy interest with Tesla call options as well. So if you want to buy a Tesla call, we would like to see Tesla race from its current price of about $248.5 with an initial retest of at least $300 a share immediate terms. So this is setting up to as a good buy opportunity with call options. So these are just a few of the opportunities that we're looking at. We're also looking at things like, NVIDIA, Micron Technologies, Palantir, Microsoft, all of the major stocks that have been beaten down silly by tariffs and everything else that's been going on in the market. So those are just a few opportunities you may want to look at and that we've been sharing with current readers. I'm going to stop here and turn things back over for any questions or comments that you may have.
All right, perfect, Ian. Some great stuff there. Really outstanding. So we're going to open the floor for some live Q&A. So if you haven't already submitted a question, go ahead and drop that question in the chat box or in GoTo. It's the question box, I guess it is. And Ian will field those questions. I'll pass them to him. So go ahead and start posting those. All right, looks like we've got one from David. How do you choose what options to trade?
We usually use in-the-money call options going out a month or two.
All right, and I guess that kind of leads to the next question. Maurice wants to know, how long do you hold the positions?
We've held positions for as little as, we had one trade that lasted a day. We were in the morning, and then by the afternoon, it exploded significantly higher. I believe that was with Apple at some point. It could be a day, it could be out to, a month the latest, because we're also watching for time decay issues as well. We don't want to overstay our welcome with any particular trade.
All right, and Scott wants to know, a newbie to puts and calls, but longtime stock investor, how will I learn how to do puts and calls using your AI system?
Well, you buy a call option if you believe the underlying stock is going to move higher, and a put option if you believe it's going to move lower. I'm also, I'm happy to, discuss, the basics with you as well. If that's something you're interested in doing, I'm always more than happy to help to, discuss it and share some of my knowledge on some of the key points of directional option trading.
And we'll get into everything that comes with these programs, because there is educational material. So it's what we call a kind of learn and earn program. So it's not just signals, there's educational material, and we'll go through that as well. Mike wants to know, are alerts sent via text, email, or another app?
They are sent out by email, and we also have an option where you can receive a text to check your email that we just issued a new alert. And every alert that we put out will always define the trading opportunity, why we like it, and we'll also list out currently held positions and positions that we recently closed out. And it's also important for me to re-emphasize that every trading opportunity, there must be a stop loss of at least 40%, given the absurdity of today's market.
And that's perfectly dovetails into Kenneth's question. He said, how do you manage the risk? We just touched on that a little bit. If you want to expand a little bit more on that.
Well, again, we just we'll watch every chart and to see if it's going to push higher, or if it's breaking down, or if a position hits our stop loss, we're going to jump out of it, protect some capital, and put it into another opportunity popping up.
And let's see. Scott asks, how has AI performed during this market turmoil? I think you touched on that earlier about the volatility and how some of the programs have taken some losses.
Yeah. Recently, we have taken some hits, unfortunately. But unfortunately, it's going to happen when the markets are swinging as violently as they have. There was one day last week where the Dow Jones, it literally swung about 2,000 points in both directions in less than a day. So a lot of this chaos is just continuing. There's also a lot of, unfortunately, misinformation out there and chaos. We have the trade war happening right now, and then yesterday someone came out and said we're close to a deal, but unfortunately we're not really close to a deal because there's been no new negotiations, and even if there are negotiations, it's going to take weeks or even months to iron anything out. So you have that kind of back and forth that's swaying the markets as well. These days it's chaos, but we're managing to navigate the very best that we can. And again, we do have the money management with the stop losses in place as well.
All right, excellent. And then Ryan wants to know, is there a specific platform I need to use for your trade alerts, or can I use any platform?
You can really use any platform. The one that I rely on the most is a basic one from stockcharts.com. I use that one the most. And then I'll also use some of the charting and the information over at, like E-Trade, for example. I'm always looking for other sources as well to strengthen arguments.
All right, and let's see, Stephen wants to know, do you trade any spread strategies?
Not at this time. Right now, we significantly do more, directional calls and puts, straddles and strangles as well. We may look to introduce spreads moving forward.
All right, and L wants to know, when will the market volatility slow down?
I wish that would happen today. You know, a good way to track volatility is by looking at the volatility index, the VIX. It's also known as the fear gauge. And typically when it drops to less than, let's say, 12, it tells us the markets are complacent. But that market complacency, as we just learned the other day, won't last long, and it can spike unexpectedly. And then on the long side, if the VIX can tell us that fear is a bit out of hand here, which we can see by looking at a massive spike in the VIX, which happened the other day. In fact, the VIX was at I believe its third highest point in years. So that tells us that this fear is just way out of control at this point, and it's likely to, likely and hopefully ready to, decrease.
All right, and Carl wants to know, can I trade this in an IRA?
I believe so, but it's best to consult your financial advisor just for safety.
Yeah, and you can always give us a call at FFR, and we can kind of show you how to set those up if it can be set up. Let's see. Another question is, your dark pool data proprietary or something similar to what might be?
We actually pay for a subscription to another site that generates all that information on a daily basis.
Okay. All right. All right. So you guys, if you have more questions, I'll give you the phone number to call in, and you can if you've got additional questions, kind of above and beyond what you were able to post here, we'll keep moving here. I'm gonna switch back over here and let us go over everything that comes with these programs so you guys can see. You should be seeing my screen again and my lovely face here. So let's go over the educational and signal course details. So all the programs come with access to Ian. Any trading questions that you have regarding the markets, the methodology. Again, you do get the direct trade alert sent to your email and or cell phone. Education on the methodology, describing the entry rules, the exit rules, how Ian manages those trades. You do get access to the monthly newsletter and the weekly wrap-up sessions. And I believe, Ian, those are some videos that you do kind of going over the market conditions, some of the the trades that you're in. Maybe talk about that a little bit, what you offer your subscribers to kind of keep them in the loop.
Yeah, we've been doing a weekly wrap up. I try to do that over the weekend. Recently, I've been doing those on Monday just to see what the market's going to do next, and we can we talk through that and share some opportunities that you may want to look into.
And then we do offer access to third-party registered brokers. These are brokers that have been executing Ian's trades on behalf of subscribers for many years. They're very well and adept at doing that. And this is an option for those that don't have the time management available to self-trade these signals. So if you don't have the time, or maybe you run your own business, or you're working during the day or whatever, and you don't want to miss trades and so on, or be late, there are third-party registered brokers that do stand ready to execute those trades on your behalf in your own account. All right, so that is an option. That is an option. We are broker neutral here at FFR Trading, right? But that is a third-party, or that is done by third-party registered brokers. And then you do get access to us here at FFR Trading. And our goal is to kind of be your guide, right? We're trying to build you a well-diversified portfolio of strategies, right, to help smooth out that equity curve. So each trader that we offer, obviously has different strategies that are non-correlated. You can get into non-correlated markets. So we offer, futures trading programs as well as options trading programs. And this helps you diversify, out of stocks and options into, some non-correlated, so if the stock market's crashing like it is, we've got, gold is exploding, and we had a huge trade in cocoa. not too long ago. We'll build you a well-correlated, or I'm sorry, a balanced and a non-correlated portfolio of strategies and traders is what we do here at FFR Trading for you. The partnership opportunity that we offer, right? We're not just looking for anybody. We have limited spaces available. We can't have everybody, huge numbers of people taking the same trades. It'll show up on the big banks' radar. They'll trade against it. So we do limit the subscriptions. But what we're looking for is if you're willing to provide your story, how did you find Ian Cooper? How did you find FFR Trading? What were you doing before? Give us a little story about how you came about us. We do want to see your monthly brokerage statements, right? So we want to help keep you on track. We're going to go over your statements, but we also will redact some of the personal information, and we can show those. So when someone calls in and asking about Ian's programs, we can show actual brokerage statements from our clients that are actually in the program, and you can see how they're doing. So if you call us and you want to see brokerage statements from some of the different programs, we can do that for you. Commit to a quarterly meeting. So you'll sit down with your strategist, they'll go through your portfolio, make sure you're on track. If there's any adjustments that need to be made, that gets taken care of. And then if you're happy, you're satisfied, provide us with a testimonial of your success. Right? Obviously, we love to have those. And if you do, provide us with some referrals. Obviously, if you're doing well, you might mention that to family or friends as well. So here's some examples of some recent Google reviews that we got on Ian's programs. Mark here says he's been following Ian's Algo AI recommendations since late November of 2024. So far, I've been profitable. Only reason I haven't given 5 stars as of now is I need to see how the results will turn out over a longer period of time. Lisa says, I'm in an auto trade account with signals sent from FFR Trading, or they're sent from Ian. But I couldn't be happier with my experience with the signals generated by Ian Cooper's Algo AI research and with a personal representative, Robert Lanusa. It has been a terrific experience, and with a 1-month return of 27%, with only 10% of my total account being exposed in any given position, I'm ecstatic about the prospects for my future security that FFR gives me. And then finally, John, with a 5-star review, says FFR and Ryan have helped me with profit-making stock purchases and sales. I have about 20 years trading experience, but consisted of entering a buy or sell the morning before I went to work, but never options. Been with FFR for almost 3 months, have the Algo AI is what he signed up for with FFR. And so far I'm making money with FFR. Didn't take every trade, but I'm doing well, right? And he says he'd recommend FFR. Much higher odds of success with their option trades, right? And that's the whole goal, right? We're doing the research for you, we're vetting the traders so you can have confidence, right? And the traders that we provide, the strategies that we provide have all been thoroughly vetted. So what is the opportunity that we have for you today? We're looking for 12 new members for Ian's programs, right? And 12 members only. If you do sign up for Ian's Algo AI program, Ian will allow you to test drive one of his other services for free, right? So of those other strategies, and we're trying to get you to diversify, so you're not just all in one program, right? We try to diversify you up front. You're also going to receive $1,000 credit. Ian has offered to extend $1,000 credit towards his Algo AI program with a 2-year subscription. Right, so purchase the Algo AI program, get $1,000 credit towards that program for a 2-year period, and also get to test drive one of Ian's other programs for free. If you are interested in building a total portfolio, there will be a special offer, right? Just call in and ask about that opportunity so we can build you a portfolio of Ian's strategies, the strategies that we looked at today. But we do need to speak to you. We have to make sure that these are a good fit for you. We don't put people in programs that obviously it's not a good fit. So you do need to call us. That'll be the 800-883-0524 number. All right, if you're outside the US, you can use the 737-292-4425. You can also email us at support@ffrtrading.com, and we'll have a strategist get right back to you. And they'll go through the entire programs, all the performance figures. They can show you brokerage statements from actual clients that are in the program, how they're doing. Right, but you do need to call us to take advantage of that offer. Again, we're not looking for 100 people here. We're looking for 12 people that are interested in becoming subscribers of Ian's programs, that are willing to provide your brokerage statements, sit down and have that quarterly meeting to go over your portfolio. We want to make sure you're doing well, right, over time. And then, of course, if you're doing well, provide us with a testimonial. All right, if you're willing to do that, give us a call, 800-883-0524 or 737-292-4425. And you'll speak to a strategist. They'll go through the programs again, make sure it's a good fit for you, right? Again, we don't want to put people in programs that's, it's not a good fit for them. All right, Scott said he's already joined the AI program. He's looking forward to success. All right, fantastic. And make sure you stick with your strategist, keep in contact with them so they can monitor your progress there, Scott. But welcome, great to have you. So guys, call one of those numbers again. First 12 members sign up for the Algo AI program for 2 years. Ian will let you test drive one of the other programs for free, whether it be Netta, the News Event Trader, the Tech Stocks, Trigger Point, Quick Moves, and then also a $1,000 credit towards that Algo AI program with a 2-year term. If you are interested, again, you can talk to our strategist about building a portfolio of strategies, and they'll work a special opportunity there for you. Ian, anything that you want to add before we wrap up here?
No, just be safe out there. Use your stop losses. Have good money management, and just remember that even with all the chaos, markets are resilient over the long term. So don't let the chaos chase you from the markets. And thanks for hanging out with us today.
Yeah, fantastic. And again, give us a call. We'll walk you through everything, help you get started. There's no pressure, just honest answers, full transparency. Thanks again to Ian Cooper for sharing his time and expertise. And thank you for joining us today. Again, reach out 800-883-0524, 737-292-4425. You can also use those numbers for those of you that have stayed to the end. Give us a call and we'll send you out the free educational trading package that FFR and Ian have put together for you. That is free. Just give us a call and we'll send that out to your email. We hope you learned something valuable today, and we'd love to help you take that next step in your trading journey. All right, until next time, trade smart, stay disciplined, and be well. Take care, everybody.